So, before we dive into tonight's questions, I was thinking about something today that came to me. So I traded this morning, but then it was really nice outside here where I'm at. And so after the first couple hours of the day, I just headed outside, went to the pool and relaxed. And I was with a friend, and the friend I was with was asking me, aren't you missing opportunities right now? The market's down 150 points or whatever. Aren't you missing out? Like, aren't you missing out on some good trades? And, it kind of occurred to me when I was with this person that, yeah, maybe I am, but you know what? The market's not going anywhere. Every day of the week, 365 days, except for, a couple holidays here and there. And so really I didn't feel like I was missing opportunities. I felt like opportunities are missing me. The market wants me to trade it. And you have to be smart, and you have to remember that one of the keys to being successful is you got to take a day off every once in a while and just relax. It's good for recharging your mind and making sure that, you're really thinking about your preparation and execution very clearly. So I actually wrote that down today, and just some of the things I keep, some of the quotes I have written down in my notebook that I try to trade by, and that is definitely going to be one of them. Is I don't miss opportunities, opportunities miss me. It's okay to take a day off and get yourself right. With that said, here's a very good question. I'll copy and paste it so you guys can see. So, the question, I've been really struggling lately, and due to my small account, I can really only afford to make 1 to 2 trades per day, typically 1. My question is, so I'll start over. I've been really struggling lately, and due to my small account, I can really only afford to make 1 or 2 trades per day, typically 1. My question is, once again, about day trading Apple options, because I've had more success with that than anything else, even though I've had more losses there too. I've heard you say many times that we should read the tape instead of try to predict where a stock will go. But I've also heard you say many times that you have a bullish or bearish bias on a stock. This is correct. I do say that a lot. Some days I come in with a bias and I am right, but I buy at the wrong times. Other times I come in with a bias, I'm wrong, and I take a loss. I try to limit the losses, but of course I struggle there too. Other days I try to come in without a bias and gauge how the day is going, but sometimes the best moves are already behind me. Basically, is the better way to enter a trading day with or without a bias, or is it better to let the day establish itself and then jump in when it's ready? Because of my small account, if I take a loss in the morning, I'm usually out for the rest of the day, so I never know if my trade at the opening bell may become an all-day hold, or if I should just wait until things have settled down. Couple things going on here. Number one, this is why I recommend printing out your trades on the weekend and reading them over. Okay? Because, for instance, this thing right here, if my trade at the opening bell becomes an all-day hold, etc. Like I said, when I started printing out and reading my trades, one of the things I realized that I wouldn't have noticed otherwise is a lot of my losses were coming from trades I was making within the first 15 minutes of the day. And a lot of my losses were also coming on trades that I was going too far out of the money in the premiums. A lot of the losses also came from earnings plays. Earnings plays as well, instead of just, normal trades, not centered around a major company event like an earnings announcement. So those are three things that I was able to notice from having printed out my trades and reading them over, that I knew, okay, don't trade within the first 15 minutes. For whatever reason, you're not good at it, okay? Most people struggle in trading because they think you have to improve your weaknesses to become a good trader. And that's not true in my opinion. Rather, just ignore the weaknesses. Identify your weaknesses and just say to hell with them. Don't even focus on them. Instead, identify your strengths and emphasize those, okay? Myself, trading within the first 15 minutes is a weakness for me. So I don't try to improve it. I don't try and figure out ways to make money in those first 15 minutes and make better trades. No, I just ignore it. I just don't trade in the first 15 minutes, okay? Buying premiums too far out of the money is typically a weakness for me. I typically lose money. So I don't try and, figure out a way to make better decisions on out of the money options. For the most part, I typically just moved away from playing out of the money options, except for rare instances. Okay? I make very good trades the last hour of the day. I make very good trades when I am in the money or at the money, meaning the strike would be in the money if it falls to that level or rises to that level. For instance, if Apple's at 558 and I'm playing the 560 call strike, or if Apple's at 552 and I'm playing the 550 put strike, something like that. So I look then for situations where I can emphasize my strengths and use my strengths, okay? And I would not have recognized these if I hadn't printed out my trades and reviewed them. I thought I knew what I did well and what I did wrong, but until I actually printed them out and saw them on paper in front of me, it was like a revelation, like, oh, that's what's happening to me. Okay? So that's my first recommendation. Secondly, having a bias is all about preparation. You can't form a bias unless you've prepared. It's like trying to write a research paper and come up with a thesis without first coming up with an outline. You need to have a general idea about what your paper is going to be about, and that'll make it easier to start your opening paragraph. So, I personally very much recommend having a bias, but you can't just wake up and say, oh, I've got a short bias today because the market's gapping down. Oh, I've got a long bias today because the market's gapping up. Oh, I don't have a bias today because the market's neutral. No, it doesn't work like that. What are some of the things you guys would say your biases should be based on? Okay, but volume, price action, trends of what? Right, support and resistance, higher highs, higher lows, but remember, we need to have stocks that we're following that are going to set that bias. Maybe Apple can be a stock that sets your bias for the overall tech sector. If Apple is at support, okay? Or JP Morgan could be a stock that sets your bias for the financial sector. Now, I'm not going to tell you what should set your biases. If you read my at the bell and at the close posts, it should be pretty obvious to you what my biases are based on. And the reason I'm not going to tell you is because everything you guys just said is what should set your bias. And that's because it's your bias. You get to choose what you're going to follow. That's the beauty of trading. Nobody can tell you what you should be following to help make up your bias. Now, I believe I follow things that put me in a better position than someone else who might follow news, but that's debatable. And that person could argue that they're in a better position basing their bias off news than I am basing it off of something like oil and the VIX and the dollar. Okay? But the only way to find out what your biases should be based on is by experimenting. For instance, today we had the market gap down. Okay? Not a huge gap down, but a gap down, and it broke below its lows from yesterday. We also had the financial sector gap down and break below its lows from yesterday. We're looking at a 5-minute chart of the last 2 days, today included and Tuesday. We also had technology break down and hit new lows. I'm going to show you guys 2 charts, and I want you to point something out, to me. Here's Apple's 5-minute chart the last 2 days. Anything stand out about Apple? Get the chart again. Here's Apple's chart. Here's the broader technology ETF. Beautiful. Higher lows. Right here. Higher lows. That's what I wanted to notice. Higher low versus yesterday. While XLK broke below its lows from yesterday, Apple did not. As a matter of fact, within the first 15 minutes, Apple put in a higher low above its low from yesterday. And then notice Apple then did a higher low at 12 o'clock, and it held that higher low. XLK was bottoming at 12 o'clock. Okay? So Apple not breaking down while XLK was apparently breaking down to new lows for the day. But the obvious market leader in technology is Apple. That is not debatable at all. That's why it's the stock I follow every day. That's why when Apple didn't break to new lows and actually put in a higher low versus its morning low, and now you had 3 higher lows, the case could have been made to get bullish. And if you did that, you caught a huge bounce in technology and the overall market in general. Okay? I'll show you another one. Here's XLF, the broader financial sector. Okay? The ETF that measures the financial sector. Stocks like Bank of America, Goldman Sachs, Morgan Stanley, etc. Here's JP Morgan. What do we notice about JP Morgan? I'll give you a hint. It's the same thing we noticed about Apple. Look, here's JP Morgan yesterday. Here it is today. Exactly. Again, we had a higher low. While the overall financial sector had broken below its lows of the previous day, JP Morgan actually put in a higher low. Considering JP Morgan has been getting killed lately, that higher low was incredibly significant, in my opinion. Now you can see the bottom in JP Morgan today its lowest point was around 230. You can see that JP Morgan XLF put in its low for the day around 1225, and then it was on the verge of breaking to a new low, actually, at 1425, which is 225. That was the same exact time JP Morgan was putting in its low for the day. This low for the day, as it turned out, was just 20 cents above yesterday's low. So again, while it looked ugly, it was still above yesterday's low. So you had two key market leaders give you these signals. Apple gave it to you right at the bell within the first 20 minutes. JP Morgan didn't give it to you until later on. But even so, as it was putting in lows around 11 o'clock, it was still a higher low versus yesterday's low. Okay? And you'll see this many times if you know what to look for. And the way you know what to look for is by preparing. So your biases are going to be formed based on preparation. And they're going to change based on what the market does and what your expectations are in terms of what you've prepared for. For instance, Apple and JP Morgan have been the unquestioned leaders of their particular sectors. Okay? So today I could have said, I have a bearish bias on technology and financials if Apple breaks below its low from yesterday and if JP Morgan breaks below its low from yesterday. And I'll keep that bearish bias intact. A breakdown like that would keep that bearish bias intact. Once Apple makes this move where it holds this low, you have to say, okay, it might be time to switch my bias here. Or the real skill of a trader is recognizing that at this level, at 553.23, when it's making this low and it looks like it's going to break below yesterday's low being 552.58, what is the optimal risk-reward trade? Right here. So this is what you see in real time. It's making this move. What is the optimal risk-reward trade right here? Yes, going long. Not because you think it's going to bounce, because we don't think it's going to do anything other than what it does. But because it's the best risk-reward scenario to take advantage of. And then, if it doesn't bounce and it breaks below this low, what do? Right, you get stopped out, and then what do? Or what might you do? Right, you just switch to the other side. And then your stop loss is just going to become today's high, or the high of this range or something. So this is very tricky. It's very hard to say, I have a bearish bias, I'm going to buy calls. That's just, it goes against your nature. It goes against what you're saying to yourself. I have a bearish bias, but I'm going to buy calls. Or I have a bullish bias, but I'm going to buy puts. It goes against your nature. I understand that. But it is the key to understanding. You need to differentiate what your bias might be versus the better risk-reward scenario. So back to this question in general, as far as coming into the day with a bias, I do it every day typically. There are very few days when I am neutral. Okay? But the key is just because you have a bias doesn't mean you have to trade in that direction. Just like I pointed out with Apple. Just because your bias can be to the downside, those are actually the optimal times to take advantage. Because you know what? At this level here, what's everybody else thinking? What's everybody thinking? What do you guys think most people are thinking with this type of setup in Apple? Right, exactly. It's breaking down. You need to be able to go inside the minds of other traders and think what they're thinking. Most traders here are thinking it's going to break down. So therefore, if it doesn't, they're going to be caught off guard, and there's likely going to be a nice bounce. Meanwhile, everybody else is going to guess that it's breaking down. They're going to buy their puts here. Gee, I get to buy calls, and my stop loss is pennies away. Look at the move you caught. From 556 to 572. Let's check out an option chain on Apple. Let's take a look at what the 555s might have done, because that was at when Apple was below 555. For those of you still not joining us in the options room, you are truly missing out, and I'm about to show you why. So the 555 calls from today, when Apple looked like it was breaking down at that moment, you could have bought them anywhere between $6.10 and $7.60. You could have bought them all day for about 20 minutes there. So let's say you buy the very top at $7.60. They ended up hitting $18.65 by the end of the day for a nice gain of 145%. Not bad for a day's work. Meanwhile, if you guessed that a breakdown was coming and you bought, let's say, the 550 puts because you guessed and you hoped, instead of taking advantage of the better risk-reward scenario and being comfortable that you might take a loss, but it's going to be a minimal one since your stop loss is very close. So instead, you guessed and you bought the 550 puts at that time because you were just so gosh darn sure it was going to break down. Well, you could have bought those for $5.20, and they closed at, what, 67 cents? For a nice loss on the day of 87%. That's why you don't guess. And that's why you take advantage of the best risk-reward scenario. So I understand this is this can be very hard, okay? Really struggling with this. And this person says, I've had more success with Apple than anything else. Then screw everything else. Don't trade SPY, don't trade Google, master Apple. It's like in basketball, somebody who's a great three-point shooter. all they do is shoot threes. It's what they're good at. They don't try and shoot pull-up jumpers. They don't try and improve their dribbling. They just stand in the corner and they shoot threes. Apple, let Apple be your three-point shot that you master. Okay? So that's focus on your strength. If you've had the most success with Apple, maximize it. And as far as a bias, it is important to come up with a bias. And I believe it is, because it helps you form expectations. And when you have expectations, I believe it's easier for you to objectively analyze risk-reward scenarios. And then as far as struggling at the opening bell, review your trades. See if maybe that's a pattern. Okay? And review which premiums you're playing. You might find that you just are terrible at playing weekly options for whatever reason. So play the monthlies or go a month out. Okay? You might find that it's better for you because you don't have to worry about time decay as much. All right, so sorry for spending a great amount of time on that question, but I felt it was a very good question that needed a thorough explanation, and it involved a lot of moving parts. So here's a question relating to HPQ, Hewlett-Packard. I know you are a chartist, which I am as well. However, how much do fundamentals and news influence your decisions? The underlying trend on HPQ has been downward for some time now. However, with the earnings beat, do you ever consider this to be a sign of a reversal? Or do you continue to base your buy and sell decisions on the chart only, taking into consideration the long-term trend? Well, this question has a little investment twist to it. And my investment strategy, as far as what do I decide to buy from a fundamental basis, it basically has to do with where am I spending my money. I go to Apple, I spend money. I go to Michael Kors, I spend some money. I go to Lululemon, I spend money. I go to Under Armour, I spend money. Okay? So those are the stocks that make up my investment portfolio. I use Google every day, so Google's in there as well. A stock like HPQ, for myself personally, I would never invest in it because I don't use, well, I guess I've got an HPQ printer, which has given me problems in the past. So, you know, I wouldn't invest in a stock like HPQ. Now, as for considering fundamentals, like I said, I just explained the extent of the fundamentals I consider, and that's if I'm shopping there and if I like the products. I do not dig into balance sheets. And as for news influencing my decision, news typically doesn't influence my decision unless it is news that directly impacts me. Okay? For instance, when Apple announced the iPhone was coming out, and I had already been holding the stock, I bought more that same day. And even though I was already sitting on a nice gain, you know, my broker was asking, well, you know, shouldn't you sell the news? You know, buy the rumors, sell the news, etc. And I said to him, no, I'm going to buy the hell out of this iPhone. And everybody's going to buy it. Okay? I see myself using this product. So that type of news did influence me. Okay? When Apple announced the iPad, around $250 or whatever it was, I bought more Apple stock then as well because I knew I was going to buy the iPad. Okay? However, now Apple's announcing iPad 4 and 5 and iPhone 10,000 with 11,000 coming soon. And that type of news doesn't influence me anymore because, frankly, I just don't give a damn. Maybe if they announce a cool TV or a credit card payment system or something, then I'll buy it. Or then, you know, then it'll influence me. But something like HPQ laying off 27,000, you know, employees or whatever to minimize costs, that doesn't influence me because they're not announcing a new product that I could see myself buying. Whenever I think about fundamentals, I ask myself, do I contribute to this company making money? I'll give you a great example. How many of you have clicked on an ad on Facebook before? But we all know that Facebook makes their money from advertisements. So this right here is exactly why this right here is an example of what influences my decision making. It's why when people ask me, oh, are you going to invest in Facebook? No. I tell them no. And everybody's very surprised who knows me personally because they know my background, they know what I do. And I was like, oh, you're not going to invest in Facebook? Like, come on. Like, why wouldn't you do that? And I look at them, I say, hey, have you ever clicked on one of their ads? And they say, oh, that makes sense. Okay. So, and just for fun, we'll look at a chart of Facebook. Always worth a little look-see here. And you can see from 45 on down to 32. Not very nice. Okay. Now, with that said, HPQ, beautiful bottom here. Huge capitulation-like volume. Highest volume on an up day since September. Kind of at a base. Yes, it drifted below this low, but not very convincingly. So it's kind of just been putting in a bottom and basing out since August. So to me, you can trade HPQ here. And, that's what I would do. Right? Now, take a stock like Michael Kors that I invest in. From a charting perspective, I wait for long-term buy signals. I don't usually trade my investments. So like, for instance, this right here to me, this is load zone on Michael Kors, and as people in the big boardroom know, I did buy it last week here around 37. So, you really have to decide what's going to influence you when it comes to a stock like HPQ. Last question. Can Etrade's Pro Scanner be set up to alert if a stock meets 2 or 3 alert criteria? For example, I might want to scan it for stocks that have both a large bid and an unusual number of prints, not one or the other. In conjunction with that, what does the ratio mean for unusual number of prints or any of the alerts that have ratio? So let's pull up a strategy scanner quickly. Let's do this. Let's create a new one. So, first of all, I don't believe that, unfortunately, you can have it so that it needs to be doing both, not one or the other like this person says. So for instance, large bid side and unusual number of prints, we'll just use those since those were the ones mentioned. Let's say the bid needs to be 50,000 shares. And then unusual number of prints. The ratio, okay, because he says, what does the ratio mean? It just kind of means the frequency. So 2.0 is the lowest, 10.0 is the highest. Meaning, unusual number of prints. Like, how unusual is it? Is it a 2.0 unusual, meaning maybe there's only 2 or 3 unusual prints? Or is it a 10.0 unusual, meaning maybe there's 10 to 15 unusual prints? Okay? Same with strong volume. Is it strong volume? You know, if you put a ratio of 2.0, that might be considered strong volume within, 30 seconds. But if you put 10.0, that might be strong volume over the course of 90 seconds. That's all the ratio means. And so let's do some of these here. High relative volume, let's do 5.0. Strong volume, we'll do 5.0. Let's do our filter, 14 cents to 94 cents for kicks. And let's see what we get. Let's go for today. And now here we go. We have our return of all these stocks that offered us, that met our criteria. Now, like I said, it will return a lot. It doesn't only give you all of them. It doesn't only give you the ones that are meeting all the criteria. It's giving you the ones that are meeting one portion of the criteria, which is definitely a downside and a negative of Etrade scanner. But like I said, all my stocks come from Etrade scanner for the most part, so you can still find some, interesting opportunities in the stock. For instance, this looks interesting. Sequential brands today, 120,000 shares traded out of nowhere. We'll keep looking. PACI, volume out of nowhere today. I just found 2 kind of suspicious stocks, just very quickly. BFCF, nice uptrend, pretty illiquid though. So even though your scanner can't do what this person was hoping it could, as I'm showing, you can still come across some good setups from all of this. And just a little insight into me, I like clicking on the tickers that I don't recognize and that pop up rather obscurely. For instance, we only saw those 2 stocks I typed in those one times. What was it, PACI? I can't remember the other one. Versus something like TMEN, we see a lot on here. We also see, PTQMF a lot and stuff like that. So, whatever floats your boat. But no, unfortunately, Etrade cannot accomplish what this person was hoping it could. All right, let's do some charts. Got some good ones today. Philadelphia is beating Boston 8-4. Just, if anybody cared about that. IWEB. So, we all noticed the same thing, hopefully, this huge volume the last few days. This is the highest amount of volume in a 3-day period for the stock in at least 1 year. at least 2 years. Since this period here in April 2010, when it just went rambunctious from 15 cents all the way up to 47 cents. Now, obviously, you know, it's in a downtrend. It's a downtrending stock. However, what I like is we're very close to a pretty good breakout. And that's right there at that 18-cent level. Okay. As for support, you can see that it broke above this level, which it was dealing with. So now I'd like to see this range turn into support. Really, this open around 14.5 cents to 16 cents. It's key support to keep this trend intact. It's put in a higher high and a higher low 1, 2, 3, 4, 5, 6, 7 days in a row. So we're going to watch to see, can it keep that pattern going? If it fails to put in a higher high or fails to put in a higher low, that'll be our first sign that some consolidation is in order. I like that the volume is increasing as the price is increasing. Let's look at the intraday charts. Again, the volume comes in the morning, and then it's rather sporadic the rest of the day. It is consistent, though. It's just very low. Not nearly the amount of volume it sees in the morning. Let's look at a 15-minute chart. Looks like maybe we have some block trades going on in the morning. Okay. So I would like to see the volume be a little bit more consistent. And I'd like to see, instead of having a majority of the volume trade in one little block or 2 blocks or whatever's going on in these volume spikes, I'd rather see it spread out. Like on GWBU, if you take away this wash trade, you can see that the volume is consistent and it's high versus something like IWEB. Why would I rather see something like this versus IWEB? Yes, liquidity. More liquidity means what? What does more liquidity usually mean? It just means more opportunity. Easy to get in and out, better action. And really quickly, I'll revisit what Shimmy said about there being an option in the strategy scanner to only display. That would be very nice if there was, or is. So let's see if we can find that button. Where did you... So we did actually find where you can choose or kind of select what's going to pop up on your scanner. It's at the bottom of the filters, we think, the minimum counts, where if you choose, you know, all these indicators, we've got a couple selected now. We've got 4 selected, I believe. So if you choose those, you have to say that it needs to meet at least 2 to show up. Okay, so let's test that. So I would just play around with this and see if that does work. So yeah, sorry I couldn't better answer that question. Anyways, back to IWEB, which we were looking at. So, you know, we'd rather have more consistent liquidity throughout the day. But really, though, this is a nice chart recently. 14.5 to 16 cents going to be a key support. Resistance at 18 cents, then 20 cents. Then above 20 cents, that's when things could get interesting. Because your next high on real volume is in a range of 29 on the high side to 25 on the close. So after 20 cents, if it breaks it on high volume, you know, it could open up and trade into that 25 to 29 cent resistance range. Definitely one to keep an eye on, though. So GWBU, this is one, if you watched our video last night, you got a great opportunity today because we said there was 2 absolutely key support levels. We said it was the 146 level and 137. We said if 146 broke, we'd expect a test of 140, and if that broke, it had to hold 137, otherwise it could easily drift back to the 120s. Well, if you look at the chart, you can see that it held that 137 low perfectly. Why was 137 important? Because it was the low from last week. It was a key low from last week that it had bounced off of. So you didn't want to break that, otherwise people might target this low. Okay? Notice, 137 is the only low that's higher than yesterday, that's higher than what was Monday's low of 111. Okay? So below 137, people would be forced to look for the next most recent low, and it would have been at 111, which is why things could have opened up. So the fact that the stock held 137, that was a great sign technically, and you can see the strong, strong bounce from 137 all the way up to 150. Did close, you know, off the high of the day, but the fact that it bounced so strongly off of 137 is a great sign. Now we want to watch 145 because that was the afternoon low. 145 key support. Below 145, it's going to be 137 is going to be the focus again. Still need to break out of 160 on the high side. Nothing has changed on the high side until we break above 160. ESX. Just a chart that really isn't doing too much for me because of the lack of volatility. Meaning it's just been pretty much flat. Right, since if you just look, it's in a nice range, okay, and it really has been. I mean, it came into May 2010. The low was 591, and look, here we are, May 2012, and the low is 591. Now, on the daily though, this could be a decent stock to trade because you have a lot of liquidity. I mean, it's trading, you know, 10 million shares today, so that's good. Easy to get in and out. And you've got, you know, some clear channels here. You've got 630 on the high side, and aside from that move lower, that brief move lower in, what is that, March, April, mid-April, you have 570 on the low side. So can kind of play this range until it breaks above 630 or breaks below 570, and then this 554 low would be, you know, the real key. You're not going to get much of a directional move. So until one of those things happens, just play the range. Buy near support at 570, use it as your stop. Short near resistance at 630, use it as your stop. Okay? If you get a breakdown below 570, lean into it. Target this low. If it breaks this low, you're going to target these lows here. If it breaks 630, play that breakout. You're going to target these highs here around 660. You know, and then above 660, you've got this high here at 682. Above that, there'd, you know, be more work to be done. You can see that it's gone through these periods of just channels. See, it did a similar thing here where the channel was just up, down, and then it finally broke this range. And then, you know, it put in lower and lower highs, and then you really got a nice down move. Now let's pull it back. Long term, what I see is just a very ugly downtrend. I mean, look at that. So based on this, my bias, there's that word again, would be that these lows are going to give way at some point in time. Supporting that bias is not only the long-term trend, which we've just identified, but also this high of 638. Here we have a lower high at we have a double high at 638. We weren't able to break above it. Meanwhile, these lows here at 570 and 562, we have a lower low at 550. Okay, so my bias is supported by the overall downtrend on the long term and the most recent action, which shows us a lower low and a double high. Now, I would still wait until you got confirmation and an actual break below that 570 level, but I'm still going to have a bias. Okay, so like I said though, the best way is just play this channel that it's in until one or the other happens. AAPT. This is a sick chart. As sick as it is though, as nicely as it's done, well, I guess it traded 10 million shares today, so at least 300 grand. So that's good. Some decent liquidity there. Broke above this high, which was kind of the blow-off high, right? So it's simple. We want to see prior highs turn into new support. So this range really right here of 3.3 on up to 4 cents is going to be key support on any dips. As for resistance, I believe it's at all-time highs. It's not at all-time highs. But there's no real volume that traded at previous levels, so we don't really pay attention to it. You can review previous videos on why we don't pay attention to previous prices that don't have any volume that traded. So essentially it's just, you know, going in blue sky territory. No technical resistance, obvious technical resistance. That doesn't mean it's not there. You've got these people who bought yesterday at 2.3 to 3 cents. They're going to be sitting on 100%. Some of them already are. Therefore, 5 to 6 cents is going to be your major resistance. Let's look at where most of the volume traded today. It came around 4 cents, okay? And then a lot of it, you know, in the morning here. Let's look at a 15-minute chart. So you had a lot of volume trade between 275 and 299, so there's definitely going to be resistance, you know, in that 5.5 to 6 cent level, because those people are up 100%. If they're smart, they'll start selling before, you know, it gets that high. and you have this action here, 2.8 to 3.2, and then a lot of volume, 3.95 to 4 cents. So those people are going to have 50% gains at 6 cents. So really, it's going to take a lot of volume to bust through that 5 to 6 cent range. Wouldn't be surprised to see it consolidate. You want to see the volume continue to stay strong. You want to see it get way higher, really, because if you look at all this volume here, this is a great deal of volume that traded at very, very low prices. And at some point, it's got to come out. I mean, these people are sitting on 1,000% gains in some cases. And if you look in penny stocks, what they'll do, whoever bought all these shares, is they lock up the float, so then it's easy to start moving on air, right? They're not selling, so it just simply starts moving very easily. And once they get major liquidity bursts, they sell into that, like they probably started doing today. This was successful on a stock like KMAG. You can see tons of volume. They locked it up. No shares. It was able to move up on very low volume, but they were selling into all of this. I guarantee it. And now anybody buying up there when it looked so beautiful is holding a bag. GDSM, same thing. You had a ton of volume trades, sub pennies, and then they sold into liquidity, and there's a bunch of bag holders now. So AAE, who knows what the outcome will eventually be, but you got to keep in mind that these people bought a lot of shares, and you don't want to get caught holding the bag. On stocks like KMAG, it's not something. If you're buying up here, you got to make sure you're honoring your stop. You got to be getting out right away if it doesn't keep going. If you have an expectation that it's going to keep going higher and it doesn't do that, you got to be getting out right away. You can't play games and hope, okay? Because you'll be left holding the bag. So a nice chart, though, at the moment. TIFF. Bought my mother her Mother's Day gift from here. I believe she owns some stock in it as well. Anyways, that's neither here nor there. So I like that it's holding this low from January. That's a key low. It really needs to hold that low. Okay, if it doesn't hold that, I would expect a retest of its October low at 56. A couple things I don't like is it hasn't rallied with the market. The market is green year to date. Tiffany's is not. It's not up a lot off of its October low. It's got a series of lower highs versus its October high and then your March high and now your April high. Okay. The volume pattern, you had this huge dump and it's never really been able to overcome it. Looking more long term, however, reveals that Tiffany's is very much still in an uptrend and really is just consolidating. And you can see where it found support is at its prior all-time high, which is a great sign from a long-term perspective. Great sign. So you want to see it stay above this high, which coincides with what that October low was. Okay. So Tiffany's really hasn't really gone anywhere. It's just another one of those stocks that's been kind of channeling. If you take that high, you can see that it's broken out briefly above that range, but now it's capped it. So from a longer term perspective, needs to break this high, 74.20 is the key high it needs to break. Now obviously that's a long way away, and that would already be a good percentage gain, so let's focus on the short term and see what we have going on. So nice uptrend off this bottom. People are using this low as a stop. And you can still trade this name using this low of 60.07 as your stop. Okay? Real nice volume towards the close. I mean, it just exploded. It's a 5-minute chart. if you look, that's the highest volume on a 5-minute basis in the stock the last 10 days. And it came at the end of the day. So I would assume that that volume, that demand that showed up at the end of the day is still going to be there, tomorrow at the open. So you want to watch that. If it opens on greater than, 200,000 to 250,000 shares within the first 5 minutes as the price is increasing, or if it decreases but holds this 6120 level, as you can see, that was an area of resistance all day until the afternoon. I'd want to see it pull back on around 150,000 shares, hold that level. I would look at taking a position and getting in using today's low as a stop like we talked about. Looking at the charts for resistance, you've got today's high of 61.99, and then you have these highs here between 62.30 and 62.85. Above that, then you'd have this high here at 63.10. And above there, the chart will actually be recovering and looking in pretty decent shape. If it can get back above there, it'll appear to many that the bottom is in. Most important, though, is this downtrend, breaking out of that. And on another basis, you've also got this downtrend to worry about. So you can see kind of on the weekly chart here. Gene. Nice move yesterday, huge move. Right into resistance though. These prior lows really capped it. Okay. But it held on to a good portion of those gains, and it was on lower volume, which is good. Let's get a 5-minute chart of the last days. So this low here at 356, it kind of broke that at the end of the day. 337 was the low, and it printed a 336. So technically it did break that, but not very convincingly. So 336 is key low. That's today's low. 324. Below that, you're giving up too many gains for my liking. And if you look at the chart, it has a history of giving up all of its gains, even on high volume. You can see that. In a really, really bad downtrend, looks like it might have started to break it though. So that's worth watching if it can sustain above this downtrend line. But as you notice here, it has broken this downtrend before, only to, give it all back. So the main takeaway I have here is, even with these huge volume spikes, it always gives up all the gains for whatever reason. I mean, I guess if you say, well, it was at 71 cents, and even at its lowest point this year, it's at 260 compared to the 70 cents it was at in 2010. It hasn't given up its gains. But there was no volume that traded then. I want to pay attention to the price action when the volume was trading, and it's very dismal. So that's the key lows, 336 and 324. The key high, you've got a high here at 352, 355. So let's break 355. Then you have highs at 365. Then you can maybe target this high here at 386. I'd like to see greater than 60,000 shares trade to the upside within the first 5 minutes tomorrow. NEWN, I don't like it. Bad volume pattern, bad price action. Lower highs, lower lows, goes up on lower volume than it came down on. Disgusting downtrend overall, just absolutely disgusting chart. Has put in a higher low 1, 2, 3, 4, 5, 6, 7 days in a row. Higher low or an equal low 7 days in a row. So that's good. So you can, if you feel the urge to trade it, use that day's low as your stop, because if it breaks below the previous day's low, that'll be your first sign that this recent uptrend is coming to an end. Key resistance right here at 64 cents. Okay, above 64, you have this high here at 73. And if it were to break that, it would, it's going to take a lot of volume to do so. And, we'll talk about it then. VSST, really nice day today, beautiful price action. Volume, decent, 500,000 shares. So, $200,000, 250,000 or so. Volume coming out of nowhere. Doesn't look like any real previous volume compared to the volume it's trading now. But you do have some history. Not a lot. Not a lot. So you just kind of got to be logical here. 50 cents is going to be key resistance. Also, you got to be smart. Huge volume day here. All-time high volume, all traded between 12 and 17 cents. So anybody who bought, they're looking at 100%. They're already up 100%. Good portion, hopefully, have already sold. Then yesterday, though, 15 to 30 cents. Let's look at where most of that volume traded yesterday. So you had some at 15 cents, so they're up 100%. Then you had some at 28 cents, 27 cents, so they're going to be looking at 100% in a couple ticks. Had a lot of volume trade at 32 to 34 cents. Okay, so, and then you also had a good amount trade at 37. So that 34 to 37 cent range is going to be where I'd like to see it hold on any dips. Okay, as for resistance, 50 cents, and then, all these people buying at 30, 31, 32 cents, 60 cents, between 55 and 60 some odd cents, they're going to be looking at 80 to 100% gains. You do got to pay attention, though, because the volume here could be trying to tell us something, especially, at the bottom of the chart. So it is an interesting one to keep an eye on. Maybe, some front loading going on. GGSMD, gave up all of its gains for the most part. These people, 2 million shares between 8.5 and 11 cents. You can see, they probably were selling in this 17, 18.5 cent range. As for support, finally had a green day after 2 down days in a row, which were the first 2 down days in a row since the stock had started trading. One to keep an eye on, but, I would have liked to see it hold its gains a little better. I'd like to see it consolidate, closer to 14, 15 cents. That would set the chart up very nicely. You've got this bottom here at 9 cents. Obviously needs to stay above that. Other than that, this thing didn't even trade $30,000 today, so just not much to talk about at this moment. PRKR. Nice action today. Nice chart. Creeping above this high here at 162. Put in a high above it. I like how it found support at these previous highs after it dipped. Okay, so 120 was a key breakout level. It broke above it and then it held it on the retest. So we saw previous resistance turn into new support. That's good. Great sign. Chart's going on 150-day highs. It's going on 1-year highs. Okay, let's break it down to the weekly. A great chart, though. Very nice trend. Definitely an opportunity here. So you had a lot of volume trade in this range. That's a high volume range that I see. And you can see that's exactly the resistance we're dealing with. This high is at 169. What do you know? Today's high is 168. Just saying. So, need to break 169. If it breaks 169, there's obviously price resistance, but as far as volume resistance, the next high volume range doesn't come until this period here, which is 190 to 211. So a break of 170, 169, 170, you could see that 190 level. And that the range there on the high side is 211. So let's see, in the future now, we want to see this high act as support. That's 147. So, 147 to 150. If it pulled back down towards there, that's a level that I might look in and get in there. As for a stop loss, I'd like to see it hold yesterday's high of 127, and that's pretty much the midpoint of today's candle. So, it would be a 50% retrace of the range almost. So, or a little bit more possibly. So, this definitely has a good setup here. I like this chart a lot. Let's talk about the first 5 minutes. See what we got going on here. Okay, so what I notice, though, is that the volume is sporadic. Not a lot of volume at the open yesterday. More volume at the open today, but still not a lot of up volume. The major kind of crept up higher. So this is one to possibly swing trade. It's not going to be extremely liquid, but at least it's consistent. We have some type of trading going on every period of the day. I like that. And it's liquid. Highest volume on back-to-back up days today since last week, and last week it was since, basically what I'm saying is the volume pattern is very, very good here. Okay. I like that on this high volume spike, this high supply spike, it didn't really move lower. And it held after that big dump. And then again, here you had a high supply spike, but it found support at the previous resistance levels, which is key. 3 up days in a row, another 3-day winning streak, a 4-day winning streak here, a 4-day winning streak here, a 4-day winning streak here, 3-day winning streak here, versus only 1 3-day losing streak and 1 4-day losing streak since February. So just overall, the trend is clearly in favor of the bulls. Of these charts that we looked at, the ones that caught my eye the most were PRKR, VSST, AAPT, GWBU, IWEB.